In this video, we will walk through how to avoid costly mistakes when handling VAT corrections in a Danish ApS company, and what to do if you discover that something has gone wrong. Many otherwise well-managed ApS businesses in Denmark underestimate how quickly small VAT issues can escalate into material financial and compliance risks. The starting point is understanding that Danish VAT is fundamentally a self-assessment system. SKAT expects you to calculate, report, and pay the correct amount on time, and to proactively correct any errors you discover. That means internal discipline around VAT is not just an accounting formality, it is a core part of your company's risk management. For most ApS companies, VAT errors arise in a few recurring areas. Misclassification of sales as VAT exempt when they should be subject to 25% VAT, incorrect handling of reverse charge on cross-border services, reclaiming input VAT on costs that are only partially related to taxable activities, or simply using the wrong VAT period or rate in the bookkeeping system. While each may seem minor in isolation, accumulated underreporting, plus interest and potential surcharges, can quickly affect your liquidity and, in serious cases, trigger an in-depth audit that consumes management time and attention. If you discover an error, the first step is to quantify it as accurately as possible. That means reconciling your accounting records to the filed VAT returns for the affected periods and identifying whether the issue is isolated or systemic. For example, was a single large invoice posted incorrectly, or has a specific type of transaction been treated incorrectly for several quarters? Once you understand the pattern, you can calculate the net impact on both output VAT and input VAT. The emphasis should be on getting to a defensible, well-documented number rather than an optimistic estimate. From there, the next step is to correct the error via the Danish tax authority's online platform, Taste Selv Erhverv. Danish rules allow corrections to previously filed VAT returns, and SKAT generally looks more favourably on companies that voluntarily correct errors before an audit is initiated. When submitting a correction, ensure that the documentation is in order. You should be able to provide underlying invoices, contracts, and accounting records that clearly support your calculation. It is good practice to prepare a short internal memo summarising what went wrong, how you calculated the adjustment, and what control enhancements you are implementing to prevent recurrence. This type of memo is helpful both for your own board and for SKAT, should questions arise later. Timing is also essential. The longer an incorrect VAT position remains uncorrected, the higher the risk of interest charges and, in some cases, penalties. As a rule of thumb, once you have identified a material error and have access to the necessary data, you should aim to file your correction promptly rather than waiting for year end. For Danish ApS companies, where liquidity and reputation with stakeholders are particularly important, delaying a known correction can send the wrong signal to investors, lenders, or potential buyers in a due diligence process. It is equally important to distinguish between technical corrections and behaviour that could be viewed as negligent or intentional. If a correction reveals a pattern of repeated similar mistakes over several years, it suggests that your internal controls around VAT are not sufficiently robust. In such cases, it is advisable to involve your external accountant or a VAT specialist, both to validate your correction and to design pragmatic process improvements. That might include updating your chart of accounts to better separate VAT-relevant transactions, adjusting settings in your ERP or bookkeeping system, or introducing a simple pre-filing review checklist for each VAT period. For example, a monthly or quarterly review could include reconciling VAT payables against trial balance accounts, scanning for unusual negative VAT amounts, and sampling a few large invoices to verify that the correct VAT treatment has been applied. Many APS companies also underestimate how cross-border activity changes the VAT landscape. Services bought from suppliers outside Denmark may be subject to reverse charge, where your company must account for both output and input VAT. If these are not captured correctly, you can end up with underreported VAT even when your net economic position would have been the same. Similarly, if you are exporting goods or services to customers in other EU countries or outside the EU, you must ensure that evidence supporting zero rating or specific exemptions is properly archived. Missing or incomplete documentation can make a correction more painful if SCAT challenges your treatment. Another area to watch closely is mixed activities, where your company has both VATable and VAT-exempt revenues. In these cases, input VAT may need to be partially restricted or allocated using a pro rata method. If you initially claimed full input VAT and later realize that part of your revenue is exempt, a correction may be necessary, and the calculations can be complex. In such scenarios, having clear documentation of your allocation method and recalculating it for past periods before you file a correction will significantly reduce the risk of disputes. Beyond the mechanics, think about VAT corrections in the broader context of governance in your APS. The Board of Directors and Management have a responsibility to ensure that the company's tax affairs, including VAT, are managed responsibly. Implementing a simple VAT policy, assigning clear responsibility for VAT reporting, and ensuring that relevant staff have at least basic VAT training are all relatively low-effort steps that can prevent the need for large retrospective corrections. Periodic independent reviews, for example as part of your annual financial statement process, can act as an early warning system before small process gaps turn into significant exposures. To summarise the practical path forward, monitor your VAT position actively, respond quickly when discrepancies are identified, use the correction mechanisms available in Taste Self-Erwerb, and ensure that every correction is accompanied by a concrete improvement in your internal controls. For Danish ApS companies, a disciplined approach to VAT corrections is not only about compliance, it directly supports financial stability, investor confidence, and the ability to focus management time on growth rather than remediation. By treating VAT with the same rigor you apply to your core business decisions, you significantly reduce the risk of unexpected costs and create a more resilient platform for the next phase of your company's development.